Today we're going to talk about the most recent developments in the capital markets, and we're seeing that Asian equity markets are falling, tracking losses on Wall Street overnight as lingering uncertainty over the debt ceiling negotiations in the US continued. And looking at the overall market situation, we're seeing that risk off is becoming more and more of an issue. So, for the time being, there's no hurry to get into the markets, even though we saw some losses yesterday on Wall Street, but still, we have to figure out what's going on with the debt ceiling. We're talking about the debt ceiling all the time, but it's not only the debt ceiling issue that is cumbersome, it is also the possible risk of further defaults. And not only defaults, but also downgrades. So it's a D&D situation, defaults or downgrades. And we had recent downgrades in the US debt market, and refinancing costs are surging, which is certainly not a positive factor for the US economy if the costs for servicing the debt will be constantly rising due to all of these discussions that we have currently. So we have to be careful, and I really would advise most investors to step aside and to watch more precisely what's going on, not only on the debt default, but also if we look at the economic picture, it is not too rosy. The data that is coming in also presents a mixed picture. We have some data points that are surprising positively, and we have several data points that are disappointing. So, for the time being, I would really recommend most investors to step aside and to watch clearly what's going on, because for the time being, the situation is simply too cumbersome and too difficult, and we have to adjust to the fact that at some points it doesn't make sense to remain invested. So for the time being, I would really recommend stepping aside, having a look, and being patient. Thank you.